Well, hello everyone, K Kim here from the Traders Club, and thank you for tuning in to our another episode of Midweek Update with K Kim. And today we have a lot to talk about. We're going to look at every single indices out there. We're going to actually use ETFs, so you guys don't mind. Spider, Qs, Diamond, semiconductor there, financial sector, and the Russell and the transport. So we're going to look at all of those. And today we're also going to talk about Apple and some of our positions that we're currently holding and some of the watch lists. I want to talk to you guys about Apple, Pfizer, General Mills, JNPR Networks, ACN, Google, ABC Network, or ABC Alphabet, Alphabet Inc. There, the Boston Scientific, eBay, Broadcom, McDonald's, Microsoft, AIG. This one is Delta Airlines and Texas Instruments Inc. So we're going to talk about all of these. So we got a lot to cover. Please stay with me. I promise these are going to be hopefully these are going to be useful resource for you guys going into next week there. So first, let's talk about Spider. Let's talk about some of the levels that we've been talking about. If you've been following me on my blog here and been following my midweek update, these midweek update that I publish on a weekly basis on Wednesday nights. And if you've been following with me, even since I've been talking since this decline here, some of the levels that we've been watching is this level is about 200 level, and we talked about this level right here, right? So these are the levels that we're looking at. It's very important that we understand these levels, right? Because we can have to gauge where we're at as far as the market is concerned. Like, what are the sentiments? Are we still in this very fearful, like volatile level, or are the buyers starting to find confidence? So we talked about this is a level of what? A fear. I talked about that, right? Anywhere below 200, right, on the Spider, and anywhere above 188 will be fear. Anywhere below the 186, what did I call that? Panic. And good thing that we never gotten below that level. You can see that this guy right there on late September, you can see we threw that doji. We talked about the doji there. The doji potentially can become a Morningstar reversal. We talked about that, and that which it did, continued higher. So anywhere below 116, 115 was a level of panic. When the panic happens, everybody start exiting, right? So this is a fear level, and so obviously we've seen a lot of fear up and down, a lot of volatility, like gaps ups, gap downs, a lot of swings throughout the day, a lot of volatility. And then I talked about above 200 level. Talked about a confusion, a level. This is where both buyers and bears are going to be a bit confused. Like, what are we doing, right? If I'm pausing the video, that means I'm just drinking my hot tea here. So what are we doing? Is it buyers? Is this where is a buyer? Is the market is going to reverse back up, or is it a massive bull trap? I mean, I got comments before. I mean, I remember I was doing my live midweek update, somewhere here, I think. This was when, like, a middle of October, like this month, it was like a few weeks ago, or I'm not sure when. It probably was a few weeks ago. But I remember getting a question from one of the attendees from in my webinar, and he said, well, what are the probability that this might be a massive, some kind of a bull trap, right? And we also talked about the characteristics of a bull trap, bear trap. We talked about that. I think if you don't, there's a video that talked about it. And I hate that term. I hate the trap term. I don't know why everybody want to throw it out. They always want to throw out bull trap. I want to throw out bear trap. And it's just, I hate that term because it's not always a trap. Sometimes it's a cultivation. Market moves is up and down kind of move. And obviously, if you look at this level right here, was it a trap, or was it, kind of pulling back to retest or resisting new support and continuing higher, right? So, I hate that word, but obviously the comment came, and I'm not picking on you if it was you. I'm not saying that was a bad comment or anything like that. I'm just saying that this is where this is where there's going to be confusion. Is it going to be a bear trap? It's going to be a bull trap? You know what I mean? So, and then we talked about anywhere above 205, 206 level. This is going to be the level where buyers going to buy, buyers going to start to get confidence, and this is where I talked about this going to be a complete reversal zone. Anywhere above this level is going to be where there's a potentially high probability, because anything goes, right? Something that I talk about all the time is there's nothing is guaranteed, nothing is 100%, nothing is an absolute. Anything can happen. However, as far as the probability is concerned, at this level, now we're trading at 208, and we also talked about here this morning that this was like a bull flag there, and then we thought we can see that we have a bull flag breakout. You can see that things are anywhere above this level, things are starting to be more about like a textbook technical movement, right? You can see that a textbook bull flag there, and then we just got that breakout today, very smooth breakout. I know we saw some volatility this afternoon, but you can see we saw a gap up, and then we kind of held there for 3 weeks, kind of slowly coming down, but we were not really rolling over or declining. It just was kind of a resting period, 3 days, and then this is what we call bull flag, and then we saw follow through. So we're at that level of a complete reversal zone in every single indices except Russell. Except Russell. Every single one of them. Dow Jones, semiconductor, financial sector, Russell, except Russell, NASDAQ. Qs are already at the highs. Look at this. All-time high. Okay? We recover everything. It took just 2 months. It just 2 months to recover all of this. And that's fascinating to me, how fast it did that. Weekly, monthly, is to continue to support bullish argument, because we're still in a primary term uptrend, right, on the major indices. And you know what though? That's what I've been pushing all month since the early September or early August, really, because we talked about how we must respect. And you know what? I'm not trying to say I told you so, I called it, I nailed it. That's not what I'm trying to say. And that's not our job anyway. I wanted to make this point that something that everybody wants to throw around Dow Jones, but they always forget to remember is that, Dow theory. I mean, everybody want to throw around Dow theory, but they always forget to remember that one of the biggest thing that, one of the most important phrases he ever said was, Charles Dow was, trend is assumed to be in effect until it gives us clear signal that it has been reversed. With the past tense, right? We don't have that. Even here, that trend is not reversed yet. We're still in a primary term uptrend. This is still primary term uptrend. We're still in an uptrend in the long term, obviously in a major primary term. And people always like, well, why do we reverse so quickly? Why did this happen? What happened to the market meltdown? What happened to the market crash? People always want to say this dramatic thing so they can get some kind of attention. Maybe they didn't get enough love from their parents. I don't know, right? But we must give benefit of the doubt to the buyers in the primary term when we're still cultivating primary term uptrend, because it's gonna go up and down. Right? And the only thing that I talk about is that what you want to fear is not straight down move. What you want to fear is a cultivation of a downtrend. What does that mean? Lower lows and lower highs. We talked about this potentially becoming a lower low, but we haven't had yet lower high. I mean, this is a high, this is a lower high. We haven't had lower low yet. That's definitely not a lower low. Is it lower low? Is it a lower low? No, that's if anything, that's an equal lows. That's not definition of downtrend. So if this wasn't a downtrend, it would have been something. It would look something like this: up, down, up, down. That would have been some kind of a cultivation of a downtrend that could lead to a market crash or whatever you want to call it. But right now, we are continuing to respect the primary term uptrend there, and you can see minor term, intermediate term, we're very bullish at this point. We're now back above that 200 SMA, that pink moving average that you see in this screen right there. There's a 200 SMA on the daily chart, 200-day moving average. This is the first time we stayed above it since early mid-August, mid to late August there, August 19th. That was the last time we were above that 200 SMA. We fell through very quickly, below all the moving averages, and we started reclaiming back up again. We reclaimed 10 EMA, we claimed 20 EMA, we reclaimed 50 EMA. These moving averages started crossing back up here. 10 EMA cross 100 SMA, and then you can see that now we're back above 200 SMA there. So things are starting to look very bullish. The next resistance on Spider is about 210, and next another one is 213. And I'll give you a worst case scenario. Worst case scenario, this could potentially come all the way down, even fill this gap, right? That might be the worst case scenario. However, if we bounce from that, that is constituting or cultivating what? an uptrend, right? Because that's what uptrend does. It goes up and down, but it makes higher lows and higher highs. As far as the price action does it, it means we're in an uptrend, right? So worst case scenario that might happen, I'm not sure. I think, you know, I have just the way it closed today, it looks like we might continue grind higher to the upside there on the S&P 500. Let's look at Qs. Qs looking very strong. One thing, you know, when I first saw this on the Qs, I had a lot of confidence in the market because obviously Qs came all the way down very fast, and it got up, got back up to this important level right here, right? This was an old resistance or old support, right? Becoming a new resistance, came down, and then we cultivated what? Higher low. That low is definitely lower than that low, which means what? That's a higher low. And then people always want to quickly call, like, you know, shenanigan, like, oh, that's a bear, that's a bull trap, right? They want to call this as a bull trap before coming down. Well, really, if I go to line chart here, that's really not a bull trap, is it? It cultivated a higher high, right? So that's one thing that I was talking about. Is I hate that term. People say, oh, yeah, there you go, that's a bull trap. That's not a bull trap. That's when the stock, when the price action, when the buyers are cultivating higher high there. So this low is lower than this low. This high is lower than that high. So we are cultivating higher lows and higher highs, and this is what it did here. And you could call that, well, that's a bull trap. No, it wasn't. You see that? And so people are so quick to, you know, call things a trap, and because they're looking at everything so quickly, like just few days or a couple of weeks. So you must understand, especially if you're not hold things much longer. If you're not, I really want to admonish everybody is that you shouldn't get, if you're a day trader, you should really get away from that, because nobody makes money day trading. Nobody does. Everybody loses, and it's a horrible life. You know, look at the market every tick by tick. It's just such it's a misery. It's a miserable. I mean, you know what though? That's my take on it, because I tried it like a long time ago. But if you're successful day trading, and if that's your thing, then it's cool. I don't mean to, you know, knock you down or nothing like that. If it works for you, it's cool. But statistically, 95% day traders lose. And with all these high frequency trading computers nowadays, it's very difficult. Anyway, so Nasdaq back at the highs. It's incredible how fast it got up there. Let's look at Dow Jones, and we're gonna look at Diamond here. Dow Jones is also getting into that important level where also that we talked about Dow Jones. This is an important level. We're getting into the level where, you know, buyers are gonna find a lot of comp. This is a complete reversal zone again. We talked about this level right here. So again, this is kind of a confusion zone. This is a fearful zone. And you're below this level, it's going to panic. And we are at the what? Confidence reversal, right? Confidence reversal zone. So you can see that we have cleared this resistance there. You can see that we are clearing this. We're slightly clearing this resistance right there as well. We're just came out today, and then we're back above 200 SMA, 200-day moving average on this daily chart. This is the first time we stayed above it since July 23rd on the Dow Jones. So it's interesting to note that, because remember on the spider it was August, late August, mid-late August, but this one is July. July, we were above 200 SMA right there, and this is the first time getting back above all the moving averages since then, and it's starting to look very bullish. Again, it's one of those things. Dow Jones is continue to cultivate weekly chart, primary term uptrend there. That's one thing that, you know, we've been talking about. You can see right there. There you go. So up right there. So this is the first time we have cultivated this uptrend, right? Because that's what it does. A lot of times if we lose certain levels of support, what it does is it come back down and creates another one. Not to mention, again, this is a weekly chart right here. Weekly 200 SMA. Weekly 200 SMA. Also interesting, remember we talked about recently, I wrote an article called that Dow Jones getting ready for a historical breakout. We talked about, you know, all resistance becoming new support. Look at this on this 200 SMA, on this weekly chart, that pink moving average there, it was support here, and then we broke below that, acted as a resistance. Do you see this? right here. This was support. We bounced from it. We came down and we broke below it, trying to get back up. And then we hit that 200 SMA. We got rejected. We fell and then we got back up to 200 SMA and then got rejected again. Got back up, came down to again 200 SMA, got supported this time, got back up, came all the way down 200 SMA, and then we're getting back up there. Isn't that interesting how precisely this level is getting, respected, right? And that this is why technical analysis is very, very valuable in this market. If you know how to use it, because so many people do not know how to truly, apply technical analysis in their trading there. So Dow Jones looking very, very bullish there. Looking at more of a longer term. I'm not talking about tomorrow, next few days, but longer term there. Semiconductor, I did a video on semiconductor. How semiconductor might save this market. That was one of the reasons because I was looking at this monthly chart here. You can see this. Let me get this up, and this is a monthly chart there. One of the things we talked about on semiconductor is basically this is an important level. After that dot-com bubble, we crashed, and we stayed here over like 13, 14 years. This is what you can call accumulation phase or stage 1. A lot of times, that's what it takes. When the market crashed like this, it takes that long to repair itself, right? And so you can see that we stayed here for long, and finally we broke out. But then breaking out itself is not enough a lot of times. What it needs to do is a retest. We just talked about old resistance becoming new support when we talked about Dow Jones Industrial Average, right? This is exactly happening here. You can see the old resistance becoming a new support right there. We threw that hammer candle, right? We talked about this like a month ago when I saw the hammer candle there. And then you can see, again, we have 2 more days before October's over. As long as we stay up in 2 more days, this is going to be solidified as a 1 monthly candle. So you can see that we're above this hammer candle. You see that right there. This is hammer top. We're closing way above it, which means we're confirming that hammer. We're seeing the follow through. And things could look very, very good for semiconductor, looking at things long term there. Daily chart, we closed above this resistance right there. Once we cleared it, there's horizontal resistance. This is support, pivot, right? Old support, new resistance, and then support again. We threw that, bull flag there, continuing higher, pulling back a little bit, but we're staying above the daily 200-day moving average right there. Again, this is important, but a lot of people ask me it's going to be some kind of a, head and shoulder pattern, right? Left shoulder head, right shoulder there. Again, I something that I was always talking about in these updates and these videos that I've been talking about is that don't just call things. We need confirmation. There's always going to be a formality, right? It's going to perform something all the time. But until we see a solid price action, confirming that formation, it really means nothing. It really means nothing because really historically, really, there's always been a head and shoulder formation happening on semiconductor. Like, look at this. Well, it's going to be head and shoulder here, here, here. Well, that didn't happen. Okay, it's going to be here, here, here. Well, that really didn't happen. Well, this time kind of happened. This time actually happened. But obviously, we confirmed it. And then we actually had a little mini head and shoulder after confirmation, and then we got like a bigger head and shoulder. Well, that never happened. The bigger the head and shoulder, the more likely it's not going to play out. A lot of times head and shoulders are more symmetrical and it happens quick. So when we're talking about head and shoulder that is this big, like it's going to happen within like it's about a 1.5 year period of time, a lot of times the head and shoulder is not going to play out. Many times the head and shoulder really going to play out. It actually happens in like what? This one happened what? Like in like a 5-6 minutes, I think 5-6 hours, 5-6 months, right? So this one was like about 3 months. Like that's the kind of sweet spot for head and shoulder, like 3 months, 6 months. But anything go beyond that, it just doesn't play out. This one right here, this one right there, head and shoulders right there, right? That was what? How long was that? April. 6 months, 6-7 months. This is what I'm saying. So these are tend to play out more, but when it's drawn out like this, a lot of times they don't play out at it. The probability of them playing out is not as greater as if it's a shorter term time frame to build that or to form that head and shoulder formation. There again, semiconductor looking very, very bullish. Weekly chart looks also bullish. We've been talking about weekly chart bullish uptrend support still respecting this level. We're still in an uptrend, higher lows and higher highs. Are we gonna form any kind of head and shoulders? Well, this was a left shoulder. If anything, this would have been right here. That didn't happen. We're above all the moving averages there. You can see that we got pretty close to that weekly 200 SMA here, 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 and so looking good there. Financial sector actually did pretty well today. 2.34% gain. We talked about the weekly chart on the financial sector. You can see this primary term uptrend support cultivation there. Looking at daily chart, very just shenanigan there, but very, very fast we got up here. We've gotten above this level. We have soared today, and we are back above 200 moving average and 100 moving average. This is the first time we're above it since late August there. So financial sector also getting into that level of what, a complete reversal zone. And we've been talking about this level as well, right? We talked about that. This is a fear, this is a confusion, and this is going to be a confidence complete reversal zone, right? Complete reversal, that's where we're hanging out. And we have our gaps over here, so those levels can make this thing, as they start to continue higher, that gap is going to make things a little bit hectic. But I think as far as looking at a more of a primary term perspective, financial sector is going to continue to do well. And if you really look at things in a big picture, you know what I'm saying? I wrote an article on this. I think we will get up here. We'll get up here. Probably not several years, but I think it's gonna continue to move us up. And it's gonna have its declines. It could have its 10% corrections and whatnot. But I think we're gonna gap back up here, just like how Nasdaq did, right? You can see Nasdaq Qs right here on the weekly chart. Oh, this is daily, but if I go to weekly, right? It was right about here. Once we clear that, it got back up here, right? So we cleared that level, we start cultivating, we got back up to those highs. And I think semiconductor will get up there, and also financial sector will get up there as well. Let's look at Russell. I know Russell has been kind of lagging. Just not to mention right now is that we do have weekly term uptrend support still holding as of today. Looking at the daily chart, we are breaking above downtrend resistance. That's a good sign, because we've been in kind of this minor term downtrend for some time with these lower lows and lower highs, right? And so next level we need to get above is this level right here. So 117, 118 area, right? This is a level where 100-day moving average is also coinciding. Above that level, it's gonna take some time. I think for the Russell though, I think above 122 is a confidence complete reversal zone. I think we're gonna get into a confusion zone here, and then we're still in a fear zone. But I think because other indices are already up in this vicinity, because of that, I think Russell is gonna kind of find more confidence. It's gonna have some benefit because of other indices are looking much more bullish there. But I think that 100 SMA, so we see if we can get above this level. Once we get above this level, about a 118 on the Russell, I do think that we'll get up to about 122.50-ish, and then if we do pull back, create that higher low, and then once we get above 122.50, this is where I would call it complete reversal zone, and down, Russell 2000 will kind of resume back up to its primary term uptrend perspective there. Let's look at transport. Transport still, far from reversing yet, but look at this pattern. This is how transport likes to go. What transport like is a lot of times, we'll throw out this pattern right here. You can see that kind of a, I know we came down, but you can see a lot of kind of a falling channel type of deal. And once we gotten above the great bullish move, and we have a very, very similar action going on right now. You can see that. So I think for the transfer, we're looking at IYT right now, above 155 or 153, 155. This is a level I would watch. And if you want to go long on transport, and I think this is a level where we're gonna see a complete reversal zone. This is gonna see where buyers declaring victory. So when I say complete reversal zone, that's a level where buyers are declaring victory, which we've seen on a spider. It doesn't mean that just because we're up here doesn't mean that it's not gonna have another decline. It just means that when we do have a decline, it's in a cultivation mode of an uptrend before getting back up, right? Higher lows and higher. That's what it means. Just because we're in a complete reversal zone, because I talked about on Dow Jones and the Nasdaq and the spider, which said we're in complete reversal zone, that does not mean that it cannot have sizable decline. It just means if we do have a sizable decline, it means it's doing that. It has high probability of pulling back to create that higher low before going back up. That's what it means. Though it could just keep going higher after that. Anyway, so those are the things I'll watch there. So again, looking at the indices there, I'm not, just looking at just the way it closed today. I think two things gonna happen. One, it's just gonna continue higher next few days. Another, we could just gonna have some shenanigan gap down. Just no reasons at all. People will ask like, why did we do this? Why did we do that? Why was it? We don't know. Sometimes market just do stuff, right? You can't. There's no always explaining, especially like a couple days of market move. Like let's say like we gap down. I'm like, hey, why do we gap down? We don't know. It's just people are just selling it up here, right? They're just people are still kind of they want to take some profits over this, right? So because the way it closed today pretty strongly, and then it looks like we have a bull flag, breakout. It looks like it's going to continue. Textbook wise, bull flag breakout usually it's a continuation pattern. But a lot of times what the market would like to do is like, hey, I don't want to make things too easy, and then we'll just have a stupid gap down and just make the bears a little bit happy, and then maybe come down a little bit lower next day, and then Monday we just get right back up or something like that. But if I forecast going into the next few weeks or so, I think it will continue higher potentially. If we can get above 210, then next one will be about 213. Again, shenanigan can happen here, though the probability at this point, the probability of having steep decline is low. But let's say if it does happen, I think the worst case scenario might be that we fill this gap somewhere here and then get back up, thus creating kind of a steep higher low there, which actually then it means it's making trend much stronger at that point. But I think in my opinion, that may happen. But if not, I think it's just going to continue higher. But we may struggle on some of these resistance there, and we probably see some pullbacks or sideways move and whatnot. We'll continue to look at that. So looking very good here. I would have to say that buyers are declaring victory on the overall market. My forecast on the market, towards the end of the year is positive. It favors the buyers. This is not the level to look for short setups. This is not the level to start, trying to short this market. Unless you want to gamble, you want to guess things. As far as the probability is concerned, market is very bullish looking at a long term, and this is where I think we'll start to look at those long-term setups going into the end of this year and going into next year until summer. So I wanted to share some of those possibly setups and watch lists with you guys, and we'll look at that. I know I just spent, this happens every time. I was going to do this market update quickly, but again, I already spent 30 minutes. So I'm going to go through these stocks very quickly here. Okay, so let's go through Apple. You guys know that I held through my positions through this decline, right? You guys remember that I held through that. I went through that and held through it, and I believe that we're getting very close to completely reversing. Then I've been articles on it, so if you know why I held through it, I wrote an article about it. But this is great because first of all, the price action suggests that we have gotten above this level. But look at this. This is high, and this is a higher high. This is low, and we're cultivating higher low. We're above 10, 20, 50 EMAs. 50 EMA was resistance before, now acting as support, right? And then instead of cultivating lower lows and lower highs, we have cultivated what? Equal highs there. That's another good sign. We kind of have this kind of a, awkward looking inverted head and shoulder type of deal. Also, you can see that downtrend resistance has cleared. So now 120 level is a very important level. This level, I've been talking about 120 probably for about 2 months now, right? 120, anywhere above 120 is the level that buyers are going to find confidence, right? This is kind of a confusion zone. Anywhere below this is going to be a kind of a panic, fear, right? And this is a complete reversal zone. Anywhere above 120, 121, this is where buyers are going to declare victory, declare victory, and come back to, resume back to its primary term uptrend. We do have a gap in this vicinity, so when we get up there, things probably going to get a little bit hectic. Every time when you're dealing with a big gap like that, things are going to get hectic. Like we'll get up and we like big decline before getting back up. But long-term perspective, I think 150 is doable. Maybe not this year, but next year, maybe middle of next year, 150 is very, very much doable. Maybe end of 2017 or early, end of 2016 and early 2017, 170 even might be doable. I liked Apple a couple months back before this decline. I like Apple now, and I think long-term perspective, Apple is way to go again. But as far as the price action concerned, 120, 121, and above that level, I was thinking about going long there and holding it for 6 months to a year. Look at Pfizer here. I've been writing articles on Pfizer. We've been long on Pfizer since up here, right here, really. And then this thing kind of getting up, and then it completely eradicated our gain, right? And then obviously kind of gap back. We held through it, and then we were able to recontrol or recover our winnings there, and we actually recently added more just yesterday. Once we cleared this level, this was important that we're watching because of the earnings we had. Usually this is a setup that we go long right here, but we had earnings that I want to wait, and then when earnings hit positive, we added it onto that. I forgot where our target was, but I think $40 or so is doable. This is where I'm probably going to start closing that. Pfizer is the reason why the Pfizer, looking at a long-term perspective, you can see that this is an important level that we need to stay above, and definitely we did that, and we got this uptrend support. You can see support, protecting, respecting, and you can see it's kind of huge inverted head and shoulder type of deal, and looks like we're gonna gap back up somewhere up here, maybe in 2 years, 3 years or so, but looks like we're just right on track on that primary term uptrend there on the Pfizer. General Mills, what we have General Mills, obviously we're a primary term uptrend. It's a strong stock. It's a strong company fundamentally and technically, and this is a level that everyone's talking left shoulder head, right. So remember we just talked about that when we talked about Qs or semiconductor. There are always going to be a formation, but without the confirmation, it really means nothing because it really didn't play out. This was really a what is that? Sometimes I just like blank when I trying to come up with it. Consolidation. Consolidation. It just whoop. I just couldn't think of that. Anyway, so consolidation. Just tight range there, and then we broke out very, very fast. Basically nullifying the potential threat of the head and shoulder formation from the bears, and then obviously we're still in a primary term uptrend and respecting important levels. You can see this was a very, very important level. You can see that we got rising uptrend support here, horizontal support respected, potential head and shoulder has been nullified, and then looks like it's going to continue. I think our next target is about 64 or so. We've been long on General Mills from 53 there. We added some more, I think, up here. We held through this shenanigan right there. This is the reason why we do not use a physical stop. I have created what we call a 2-parts trigger system, for our exit strategy, because if we had a stop just below it, we would have got stopped out, and then we were not able, we were not able to profit from it. And people always say you can always get back in. No, you cannot. You cannot, because if you always go back in, you don't have your system in place. Because if I would have got stopped out, I cannot get back in until I see my setup again, right? So you cannot. That's unless you're day trading. If you're day trading, yes, if you're doing anything short term, you get out. You can get in anytime you want. But if you're doing a longer term trading, like I do 6 months, a year, 2 or 3 years, you gotta make sure that their setup is right before you get into it. Because I'm gonna hold things that long. That's the reason why, that's the same thing happened in the financial sector, same thing happened to NASDAQ. We're long on all of those. We held through it. We didn't get stopped out because, obviously, we have 2 parts trigger system, and that was a shenanigan that we were able to dodge, and we're benefiting from that. JNPR is one of those things that we belong after ER right here on this day. It's late April there. Right in ER, this was again head and shoulder from inverted head, left shoulder head, right shoulder. ER jumped up, got long there, came down, just had a lot of up and down, huge move there. And really though, what's really attractive with JNPR Networks is a weekly term. So weekly term, you can see that we have this primary term uptrend going there. Really important thing is this level right here. This was an important level to hold. right? You held that level, and then we had another level, and we closed above that level. Remember last time we had something, so we got a left shoulder here, head, right shoulder. This was important level, and then we held this level right there, and it had a huge move. And I'm not sure if we're gonna go all the way to 50 or 60 or so, though I think it could. But I think this stock looks very, very good, and we're very excited about how well it moved the last several weeks there. So it's doing great. ACN. ACN, we've been actually low on ACN since I forgot. I think it's about here. Somewhere about here, we started closing our positions up here. We're position trading about 6 months or so, and then we pretty much got most of it out, and then we had that decline. We really didn't care because we're completely out of it. We got back in this day right here. Got back in this day once we clear this level right there. You can see that old resistance. We clear above, we gapped up, a jump started above 10, 20, 50 moving average and 100 SMA and 200 SMA. We triggered there, went up, came down, and then you were cultivating higher lows and higher highs. I think our next target is about 120 or so, and looking good there. Google, we've been talking about Google, Alphabet Inc. We actually been long on Google since I think it's right about here. So March there, so we held through, had a huge earnings, came down. I written an article on Google where when it did come down and fill that gap, but that's an important support level. We talked about this. We've been talking about old resistance, new support this whole video. You get exactly the level, and then we get up, came down, and then now after another earnings, looking very, very solid there. Again, I called $800. It's gonna be $800 stock. When I wrote an article there, I think we're gonna get there, maybe even more. Google looking very, very bullish there. Boston Scientific, huge move today after ER reaction. This is the one that we at first this year we got long here. I've been writing article on this on my blog. Some of these ones that I talked about, I wrote a blog about it. I documented it so you can see. Went long here, and then we've been closing our positions up here, and then we held through just a little bit, and we got stopped out here, and then we got back long again this morning, early this morning, somewhere right about here, once we cleared this important pivot level right here. And you can see we're above all the moving averages, and we're breaking out. But again, Boston Scientific, it loves to break out in this fashion. Look at this resistance there. We broke out, boom. We have another kind of a falling channel type of deal. We broke out, boom. We have another falling channel there, right? So you can really see this like a major bull flag, right? And we got this, and also that's a primary term uptrend, right? Higher lows, and higher highs. What's really attractive about Boston Scientific is, remember I talked about financial sector, I talked about semiconductor, I used Qs as example. With the higher lows, higher highs, where these levels respecting, I think it's gonna get up here again. I think Boston Scientific, I mean, it could take, I don't know, it could take up to 5 years, maybe even more. It depending on how fast it get there, 7 years or so, but I think we'll get up there. I do think that up here about 23 level or so, that's our next stop, our target, about 23. That's the level I think we're gonna probably see some steep pullback, because people are gonna just think about like, oh, there's a huge left and right. Remember I talked about that. These humongous head and shoulder pattern do not play out. Though anything can happen, it just have a low probability of playing out. So really, monthly charts are very, very attractive because there's so much room to go. And just just get back up there. And again, I think that a Boston Scientific is, again, fundamentally, technically, looks great here, and I think that's something you can keep an eye on. There, let's look at eBay. eBay, we've been we've been actually low on eBay since we've been watching eBay for quite some time, and we really didn't get in until I think like June or May or so. I think once we clear it, because I was watching this level right here, this right there. So this is where we are long, right? We held through that, and then we started seeing that abrupt decline when the market saw that in early August, and we held through it. Obviously, we were doing pretty good last couple of weeks there after earnings. But really, this is a very, very important level. This whole time we've been talking about what? Old resistance becoming new support. That's very, very important, because you can see that it's happening all throughout. Old resistance became new support, and you see the huge bullish move there. So I think eBay is gonna be a strong stock that going into the end of this year, next year. I can even see this happening 36 sometime next year there. We've been like just hanging out, just really we've been just kind of consolidating really for about 2 years, right? 2 years of consolidation, and then we finally broke up. Remember we talked about that on semiconductor. We use the semiconductors analogy. What happens after it breaks out? It wants to retest it. Though not always. Sometimes it doesn't. That's the fun thing. That's what makes this market challenging and fun, because sometimes it doesn't always do what your formula think that it's supposed to do, what you think it's supposed to always do. The textbook says when all resistance becomes new support, it's gonna come back down. Sometimes it doesn't. Sometimes it goes straight up. So when I decided to go long here, I knew that there's a chance that it's gonna come down. Because of that, I gave him a lot of leniency, which means my stop wasn't always tight, because I do not go for these small gains. And so I gave him a lot of leniency, and so we pull back steep though, and it eradicated all my gains, but I was recovered, you know, because I was patient enough. I was recovered pretty quickly there in just last week or so, right? And so now looking at this, also in a daily chart perspective, we're cultivating what? Higher lows and higher high. What does that mean? We're in an uptrend. We're in an uptrend. So eBay looks again like 34, 35. Looks like a good stock there to get up there. Broadcom, I'm watching this. We're not in it. You know what you should really pay attention is monthly chart. Remember we just looked at semiconductor. This is a very, very similar chart. Again, old resistance becoming new support. Isn't that interesting? It's continue to happen. Resistance, support. This is accumulation phase. How long did it take? 14, 15 years. Very, very similar to semiconductor we looked at. Went up, crashed, semiconductor ETF, I mean. And then you can see the accumulation phase, first stage, and then we finally broke above it, and then quickly it's retesting it right now. The monthly 10 EMA has been acting in support for the last year or so, and if we can break out from it, I do think that in long-term perspective, we'll get back up here. Yes, I do. But looking at a daily chart, we have a left shoulder head, inverted head and shoulders, and you're above 54. I think that's a good level to watch for potential engagement, and I think like 64 or so is a next level of support that you can also use your Fibonacci, something like that. And your first target about 62, and then about 65 or so, right? So looking at that, McDonald's. Here's the thing about McDonald's. McDonald's is awesome because look at this weekly chart. Again, another like since 2011, another like 4 years of consolidation or channel type of deal. We broke out. I'm not in McDonald's. What I'm gonna do for McDonald's, I wanna wait for a retest. Though it may not happen. If it doesn't happen, if it keeps going higher up from this point on, then I missed it and I just have to let it go. I cannot chase it. I will not chase it. But watch this. Right here, consolidation, boom, bullish move, another consolidation. Is that interesting? That's how the market moves. It goes up, we consolidate, goes up again, we consolidate. What I'm looking for right now for McDonald's, pull back, retest, all resistance and new support. And if it does that, I am willing to go back on long there on McDonald's. If it does that, you know, we test all resistance as new support, then gap back about 140, 160 in, I don't know, it could be in about 2-3 years or so. And that's a good move. Microsoft, looking at this weekly chart, this is a, you know, again, this is important level. Again, you see this. Look at, we've been talking about this. Look at this, about 15 years of consolidation. It's more like accumulation phase right there. We broke out right there. We retested it, boom, and then we consolidated. We had a huge swings, but we stayed up, and then boom, another boom, right? So you can see we're on an uptrend. This thing probably gonna get back up to 60s there, right? 60s there. But again, it all started after what? The old resistance becoming new support, right? So looking at daily chart on the Microsoft, really, I mean, there's a strategy we could have used, was probably just going long right at open on the after earnings. But I think if you're not in it, we're not in it, but you know, best to wait, potentially kind of go up and maybe pull back and then if it, see if it's gonna fill this gap before going higher. And so I think I'm watching this, but I think if this thing just keeps going, you gotta let it go. Don't chase it, just let it go. AIG is another good setup here. Really though, AIG, again, the whole theme of this video, all resistance, new support, resistance. We got back down to important levels, support. Again, sometimes they're not gonna always like respect it a perfect way. You'd be like, well, what is that? Well, if we go to line chart though, sometimes right there, well, it's almost perfect. You see that? It's almost perfect. All resistance, new support. And then look at that, went up. We broke. Okay, so remember we looking at McDonald's and all that stuff that we just looked at before we looked at AIG. This is a concept, right? So McDonald's up here, and does it keep going higher? Cause let's say you missed your chance up here. Don't chase it. Wait until it pulls back, and then go back long here. So McDonald's, if it keep going higher, and McDonald's and Microsoft, we've been looking at it. They're up here after a consolidation breakout. Don't chase it up. Wait till pullback, and it could take 4 or 5 months, maybe a year, but then just be patient. And then when it goes back up, this is your entry, and then now you can ride it for the next 6 months, a year, right? So AIG, if you're not in it, I think it's too late. I would personally, because we're very, very close to the highs, all-time high. Oh, it's not all-time highs, but that recent highs there. Delta Airlines, we got 2 more there. We'll close the video. Delta Airlines. Again, this is important level right here. So I'm actually waiting. I think it's earnings coming up since November or something like that. But what I'm waiting is coming down, pulling back, kind of retesting this level as new support. And then when it bounces back up, you can get long here after confirmation clearing above that level, or anticipating the move somewhere at that vicinity. We could probably anticipate this uptrend to be respected here. So it's also one of those kind of attractive setup there, right? You can see that this is important level that it held, right? That we held that level, and then this is another important level. That if we come back down, we want that level to be held as new support, and that's the level you could potentially engage there. It looks like Delta Airlines, if we can continue higher, I mean 70, 65 could be a target price there, maybe 6 months or so. Texas Instrument, this one again, I was watching it. This thing moves way too quick for me. I can't, look at this after clearing above the resistance, holding above all of that, moving averages, earnings gap, and then now it just kind of it advanced too much. So obviously this is one of those things I'm just gonna let it go until kind of pull back. What I'd like to see really is maybe pulling back, even fill this gap, though they might not happen, and then getting back up, and that might be your entry. And then in that process, we might have that uptrend support as well, right? Because we at this point we do have kind of solid higher low there. You see that's low, that's higher low, and then we don't really have a solid like higher high and higher low. We just kind of went straight up from this point. So I think it will be nice. I mean, I'm not saying it's going to, because it could just keep going higher, but that's what I'm saying is that I'm not gonna chase it up here. I rather wait for a pullback going back, but definitely something to keep an eye on, because I think Texas Instrument, looking at the things, like trend perspective, I mean, we went up, we had a little bit of correction, got up again, kind of a steeper correction. I mean, I think about 80, 70 could be doable, maybe a year or so. And so these are the, these type of action you wanna keep an eye on. And again, I mean, this thing can even might get up here in I don't know, 5-7 years or so. But so when the market started looking bullish, forget about all the short setups. Look at the bullish setups, and then watch it. Don't get in right away. Make sure your setup is your system is solid. Make sure you're disciplined, so that you don't just get in emotionally, but wait for your setup to come and confirm. Because then you're not getting it emotionally, and a lot of times, sometimes it takes months. A lot of the setups that there's a lot of stuff that we got into, like Boston Scientific and stuff like that earlier this year, like a Pfizer, Starbucks. We've been watching those for quite some time until a certain setup has confirmed. Like for instance, like Boston Scientific. When we are thinking about going long earlier this year, we've been watching it since late last year. So what I were watching it was this thing get up, and we watched it. I didn't want to go long here, so we watched this thing going up, and I didn't chase it. I waited till pullback, and it was important level that we hold this level, right? Look at this. This was important level, resistance and became, or support became resistance, become support again. And once we cleared it, boom, we enter right there. This is where we entered earlier this year, and then we continue again. I documented all this, wrote a blog about it, how I was trading it and what my setups were back in early this year. And then, and obviously we're watching for some time, and then once the setup was available, then we went long, and then we were able to it got to our target very quick, like 3 months, just because like just huge gap ups and stuff. A lot of media, I think the news came out, and then again another just kind of a channel, the falling channel there, and then huge move there, and obviously I think it's going to continue higher to the upside. So yeah, I thought I'll share some of the setups, some of our positions, some of our watch lists, so you can watch those, and to just give you guys an idea of what kind of setups that I'm looking for and things like that. We've been long on the indices all year long. We held through all the indices. We held through all that, and we are now recovering those losses because of what happened in 2 months. And sometimes that's life. That's a life of a trader, is that this market pushes you to the edge, and you hold through your analysis. Somebody asked me like, somebody tweeted me once, when the whole thing happened. He's like, hey Kay, you're the only one that you stood your ground when this whole thing happened, when this whole decline happened. I told him, I was like, hey, this is a market that you ride or die with your analysis. Really, I mean, I'm not trying to be cool with that statement. It's just that that's how it is. You ride or die with your analysis, and and really what I was counting on was really the primary term uptrend, right? Because we're on a primary term uptrend, there's higher though anything can happen, higher probability that it's going to bounce back up, and that's exactly what it is. But we've been very happy about that. I've been very pleased how the market has been acting last 4 weeks. We have a huge, looking at S&P 500 last 4 weeks or so, very, very strong move. You can see that right there. You see, boom, 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 right? With the hammer candle there, I wrote an article called Double Hammer, right? You guys remember that? Looked very, very similar to 2011 correction. Obviously, actually almost identical. Right, we had a long hammer there, and then we had a hammer here, and then we had a gap up. We had a hammer there with a gap up. So the question probably is like, well, we might get this pullback here. We don't know. We might or we may not. Sometimes, there's something that, what I talked about in that article is history does repeat, but it doesn't repeat exactly the same way. So if this time we pull back for about 4 weeks before going higher, and then pull back again, and then we did this, we can potentially happen here, or it might not pull back until we get up here and pull back. Nobody knows. So, always do your analysis based on the tangible data, and looking very, very strong here. And so let's see what happens next few days, and then we'll go from there. Again, thank you for tuning in, and we'll talk to you guys again next Wednesday on our next episode of Midweek Update. Well, have a great night, and talk to you guys soon.